Hi, my name is Kem Washington. I write a personal financial blog at Kimberly.com. I'm also a certified public accountant and a university professor as well. Today I'm going to talk to you about how to calculate your tax liability when you file a married filing joint tax return. The first thing you want to do is first download a form 1040. You're going to use this form to input your total income. This would be from wages, interest, dividends, any source of income you're going to report on a tax return. Once you determine your total income, then you're going to also determine what are your adjustments before AGI. This would be examples of tuition. It also can be an example of IRA deductions and student loan deductions as well. Once you obtain your additional adjustments from AGI, you're going to take this number and subtract it from your income. This is going to give you your adjusted gross income, which is also referred to as your AGI. Once you obtain your AGI, the next step that you're going to have to also determine is whether or not you're going to itemize or you're going to use the standard deduction. The way that you determine whether or not you itemize or use the standard deduction, you're going to use the higher amount. Let's say, for instance, if you paid a mortgage, you may have some home mortgage interest, or you also pay medical expenses, then you're going to get your total itemized deductions, use the Schedule A, and you're going to take that amount and you're going to use it on your tax return. If you didn't have these different expenses, you're going to also use what's called a standard deduction. The standard deduction is a given amount by the Internal Revenue Service what you can deduct on a tax return. The next step, after you determine whether or not you're going to use the itemized deduction or the standard deduction, the next step that you're going to take, you're going to determine now what are the total amount of exemptions that you claim on your tax return. Exemptions could be for your dependents and also for yourself. You're going to take that amount and you're going to calculate your exemptions for your 1040 as well. Once you calculate your standard deduction or itemized deduction, whichever one you choose, you also have your exemptions at this point. You're going to take these amounts, subtract it from your AGI, and you're going to get now what's called your taxable income. Once you have your taxable income, you're going to compare that number using the tax tables from the Internal Revenue Service, and this is how you calculate your married filing joint tax liability. So again, if you have any other questions, please feel free to visit my blog at Kimberly.com, and thanks so much for your time and have a great day.